p.m. BST every day of the week, where we discuss all things to do with the modern market, that is the crypto market, the NFT market, and how to make money by leveraging the internet and the latest technologies. I'm your host, Bchek. I am joined by my legendary co-host, Legendary, the OG NFT collector, the airdrop extraordinaire. And we've got a lot of good stuff to talk about today. We've got some nice headlines, but we're also going to do a slightly different show where we dive into some of the strategies to make some money and also not lose it. We spoke yesterday about how we're feeling a little bit anxious, or I did at least, about all of the potential opportunities of the bull market, and wanted to make sure we've covered some of the best learnings from some of the other top traders and collectors in the space of how not to mess it all up if it is indeed true that that is where we are. But before we get there, before we get into those interesting insights, as a reminder, friends, nothing that any of us say here is financial advice. This modern market is exceptionally risky. No one knows anything for sure. Please do exercise your own judgment and proceed with caution. With that out of the way, Legendary, how are you doing this Friday, the 10th of November?
GM, doing pretty well. Was quite surprised by your last minute idea to do today's shows a bit differently, but I'm definitely down for that. I think it's a good idea. How did you enjoy our guest appearance yesterday on the morning show?
Yeah, it was fun. I thought it was very, very fun. I got some nice reviews, got a couple of messages from a couple of people saying that you appeared relatively intelligent. When I say you, I mean you plural. We appeared relatively intelligent. We came across well. I was just watching the YouTube comments and no one slagged us off. So that was the win for me. I think if people on YouTube are not being mean to you, then
You've won the hearts of the audience.
yeah, that was my thinking. What did you think?
Yeah, also got a couple DMs. I like the wording of appearing relatively intelligent, because it is true. We still don't know nothing, no matter how long we're going to be in this space. It's always a lot of speculating that's going on. So never, like, I would have hated if our takes came across like as some kind of pseudo guru who claims to know it all.
Well,
But it was,
the funny thing about that though, and just mate, check your microphone. I'm not sure. I mean, it's completely fine. I can hear you. I'm just wondering if it's on the right one. Just double check. I think it's probably okay, but I'm just double checking.
That's the right one now.
Yeah, there we go. I thought it was a little bit off. The fun thing about the show was that, I mean, Clemente mentioned one NFT project on the show, which started immediately pumping during the show. Then we were talking about ETH, and I was making the point, you said we're not gurus, and we definitely are not gurus. We don't know, obviously, what's going to happen, but we're talking about the kind of ETH BTC ratio and how ETH, for a little bit of time has kind of underperformed Bitcoin and Solana. And as a consequence, people might have been thinking, well, should I get rid of this? Do we jump on the new horse, leave this horse and go to the new one that's running much faster? And the broad point was, don't do that. The whole point is it's underperformed, and therefore, like, you should just stick with it. It's going to reperform. That was our thinking kind of across the board. And then I think even during the show, it started ripping. So like,
yeah, during the show, ETH pumped to 2K, and the point was also the same point that we didn't only make on the morning show, but also on the modern market yesterday, saying that as soon as we will see positive news around ETH ETFs, obviously ETH will catch up to the Bitcoin pump, and that played out.
Absolutely. So I thought that was pretty funny. Like, we say we're not gurus, no one is, but then everything that anyone was saying, not just us, during the show yesterday, just started bumping. And another really interesting observation, and I guess we've kind of touched on it before, but hearing them talk about it, given that they've run their show, and if anyone's confused at the moment, we're talking about the NFT morning show run by Pio and Nick and Clemente and Signal and Kicks and Easy. They talk about like the metrics being an indicator for the market. And I was thinking about this after they've said, like, okay, their engagement's up. You've got random people shilling random projects in the comments. You've got people DMing them, kind of asking like, well, can we get featured? I mean, even yesterday we had someone jump on stage playing some strange character, trying to shill something. And I guess in a more quiet period of time, that doesn't happen, right? And noticing that those types of things happening. And I walked away from the show thinking I would love to see a chart of listeners and engagement versus the coin prices, because I would have a strong suspicion that although it probably doesn't track perfectly, but there's some kind of alignment in those two things. That was another reflection. What about you? What do you think about that? And then any other thoughts that you had walking away?
Yeah, I agree with that. And it's always the mutant apes. Like when that person requested yesterday, I was thinking, do I let them up to the stage or not? I saw they were like from the mutant cartel. I was like, yeah, maybe they will add to the discussion. But then still a mutant. I mean, no offense to you, Aviv, in the audience, but somehow mutants, and I told you this, right? Somehow mutants changed from just being that amazing collection within the Bored Ape ecosystem to being the preferred choice of bots, of Web3 marketing agencies, and of the weirdest scams going around. I don't know what happened, but honestly, like thinking about that, that's exactly one of the risks of having like a decentralized brand. You can't control who's repping the brand, not even suggesting that all of those bots are owning the mutants that they're repping.
Yeah, exactly.
But you just can't control what happened to those assets. And I don't know why it's exactly like, why are all the bots mutants and not doodles or whatever other PFP collection? I have no idea. Mini rant to start the show, but I would quite love to know that.
Yeah, it's funny. It sounds like you're a bit of mutant prejudice, Legendary. Did a mutant hurt you?
Yeah.
Has a mutant hurt you before?
My mutant bags hurt me. That's the personal history. My mutant bags hurt me.
You have a personal vendetta. Okay, so your mutant bags hurt you, but there was no mutant who has personally scammed you or
oh no, a mutant agency owner ghosted me. That's not enough. That's not enough to fuel my vendetta.
I see. Okay, so we're not a fan of the mutants entirely today, but in general, most of them I'm sure are fine. But we are noticing just a strange influx, not an influx, an uptick in activity across the board, whether it's either scam related stuff, just interest, even Discord messages. I've when Discord sends, or you get these new random friend requests. I find that's always an interesting indicator too. So that's something to note. One of the things we were going to go into today, and I think maybe I'll go through the headlines. I'll touch on those things first, as always. But as I mentioned, we want to talk about the potential bull market and what kinds of things that people who have done very well in the previous ones have started writing. And I think it's quite important to note that they have started writing it because I guess they think that is exactly what we're going into. So it's worth reflecting on, so that you can learn from them and have a think about what you might be able to do to capitalize in some way. So before we do that, let's obviously get you the news, get you the headlines. And as always, it's from the snapshot. It's pinned up top. If you do find it brings you some value today, please give it a like. So let's do it. Starting with the price action, we have CryptoPunks up 10%. They're absolutely ripping. There were so many buys overnight and in the last 24 hours. The floor's up at almost 58 ETH now. So real strength in the CryptoPunk ecosystem. Number two, Bored Apes are down just a few percent at 31.2. Mutants at 5.9, down 4% after Legendary's comments. DeGods at 3.4, ETH down 1%. Captains at 4.1, down 2. Azuki at 6.1. Penguins at 5.1. Moonbirds at 2.2, down a few percent. And Nouns at 24 ETH. A few top sales. We have a really cool CryptoPunk hoodie selling for 180 ETH. Somehow that sounds cheap for this one in particular. Looks really cool. That is $380,000, which doesn't sound that cheap. And then you have Tyler Hobbs Fidenza selling for 79 ETH, which is $166,000. That was one of Gordon Goner's buys, I believe. Getting into the headlines, we have $9 trillion asset management firm BlackRock registering an ETH trust and confident at the same time that a spot Bitcoin ETF should be approved by January. And I think it was that latter part of the news which sent ETH up 10%. Also, Flooring Labs, number two, does 4,746 ETH volume yesterday, which is more volume than OpenSea. This context was provided by none other than NFT Stats, who's with us today. Said in terms of overall percentage of volume, Flooring Labs has consistently sat around 25% of the total secondary market. Volume has been dominated by Bored Apes, with more than 50% of trading on Bored Apes most days. Pudgy Penguins is number 2. That's super interesting because that's not, I don't believe that's recorded in the data which I typically use. So definitely need to start looking at that more and figuring out what's going on there. And finally, Roblox CEO talks about potentially adding NFTs to the gaming platform. The CEO of Animoca commented on that, saying Roblox has over 200 million MAUs and approximately 65 million daily active players. Sentiment is changing, and the spillover due to the shared network effect inherent in Web3 would have a massive impact to everyone in the NFT space. I think that tweet from Eliza was going viral. People like that news a lot. Legendary, that is the price action. Those are the headlines. Do you want to maybe do a little bit on the first one first, and then we'll get into the discussion?
Absolutely. You mean the first one, the BlackRock
Yes.
ETF that,
Yes.
or the trust that has been registered yesterday in Delaware, obviously same state where also the Bitcoin trust has been registered. I think you said everything, almost everything that's important about that. For me, the main takeaway is that the market has received the news of the ETH ETF as if it is a done thing. It's certain that it's going to be coming. There is no doubt. And this is how the market reacted to the confidence. So this is the confidence that the market has been showing when it comes to the ETH ETF by BlackRock.
Yeah, I think that the market was definitely very confident on it. It said ETH pumped from about 1,900 to 2,000. A bit of historical data. The last time we saw this price was back in May 2022, according to this article. I'm not sure about that. I thought we touched 2K actually earlier this year, right? I think we touched 2K just this year. So on some level,
wasn't it in June, July, something that we touched 2K quickly? Let me look it up.
So one of my first questions here, Legendary, and actually I'd love to hear Sam's perspective on this. Well, both Sams. We've got NFT Stats, Sam with us, and also Sammy. Would love to hear perspective on this in the sense that we were not that much lower than this, not that much long ago. So say we just touched 2K earlier this year, but this run,
we did mid-July.
Yeah, there you go. So we're only, less than 10% above that point. But this one just feels so different. It feels so different. It feels like lots of other people also are feeling it being very different too. Legendary, my first question, then would love to share this around, is why do you think that is? Like, why have people, the price isn't that much more than what it was in when you said July 22 or something, or July 23, sorry. So what's changed here?
I think to me the difference is that ETH has been lagging in this run. You had Bitcoin leading. You had a very, very clear reasoning as to why BTC is pumping. And to me, still the strongest thing is, and I know I'm going to repeat myself, is that fake ETF approval did exactly show you how the market would have reacted to a real ETF approval, because they did believe that to be true for 5 minutes. And obviously ETH didn't get the same attention, didn't get the same mindshare on the timeline. And now that you have those news around the ETH ETFs by none other than BlackRock, you have that feeling of relief somehow that, ETH is being talked about. Nobody forgot about ETH ETFs. And the market had that kind of pent-up interest that they also had for BTC, similarly in ETH, just waiting for the good news to fuel that pump. And that, to me, no matter if ETH is going to dip under 2K or not over the weekend, is exactly what made it feel different this time than the quick spike that we had in July, but that we also had, I think, in April. We also had 2 days where we were above 2K, even at 2.1K. But this is the main difference to me.
Yeah, I mean, I definitely think there's more substance to it now. So is what you're saying, if I understand correctly, something like this is the one that is real, this is the one that is realer, this is the one with more substance. It's the ones before where we were kind of moving up and then coming back down, where it's just like, that was too early. That was the one without substance in some respect.
Yeah, to some extent, yeah. I don't know if more substance might be a good wording. I wouldn't go as far as saying the other ones weren't real, because the numbers certainly were real. But this feels like it could be more sustainable. I mean, it's always hard to talk about numbers and what the ETH price is going to do. So you can, clearly feel that I'm hesitant to say ETH is not going to dip under 2K, because I just cannot make such an assumption or not. But it definitely feels different. And to me, the reason is the ETF, the potential ETF approval.
Fair enough. I think that's fair. Sam, NFT Stats, welcome to the stage with us. Thanks so much for your content recently. I've been constantly providing additional context from you in the snapshot almost every single day this week, I think. What's your thought?
I had 2 coffees yesterday instead of 1, so I just tweeted a lot. And like half of them were sarcastic, which is not my normal mojo.
Keep it going, man. Keep it going. I've noticed the uptick. Maybe that's one of the indicators that we're back as well. Sam's tweeting more.
I never left, man. I never left.
Yeah, but you got the
daily show every day in the Bear. Come on.
But you got the 2 coffees now, so it's going double charged.
Exactly. No, so to this question, I think there are a couple things. One, I'm embarrassed by how little I remember ETH going to 2000. I think one of the big things is that last time ETH went to 2000s was 2 weeks after the elementals drop. And NFTs were like straight down. It was like one of the worst stretches for NFT prices ever. So if not the worst stretch for NFT prices ever. So I think like as a community, the people among us who were, whose sentiment you're gauging, we're all down really, really bad. Like that did not feel like a bullish time, even though ETH was rallying. Like NFTs literally could not have been doing worse. I'm looking at the chart right now for like the different indices I track for that. So I think that's one of the big things. And I think the second thing is what Legendary mentioned, which is that, at that time, Bitcoin got up to 30,000, but it didn't get as high as where we are now. Solana wasn't moving, whereas right now you just have a widespread rally. I mean, at the time, in July, Solana got up to like 25. It didn't even rally, and it felt like I feel like right now you have 3 different things going on. On the one hand, like risk assets are on fire. I mean, the stock market had its most consecutive updates since 2021 until that got broken yesterday. So I think there's macro tailwinds in the sense of people thinking maybe the tightening cycle is peaking and things like that, which are just driving all risk assets higher. So you have that behind us. We have the ETF, which is like Sirius Alpha, which is very unique. And when I say alpha, I mean it's unique and to this sector, as opposed to risk assets on the whole. So you have the beta working, you have the alpha, and that you have people talking about the halving coming up, and just kind of like a renewed sense of attention on the space, which I think only happens when the entire complex moves higher, which we're seeing here. So I think that those 2 factors make this feel different. But for me, the big one is I remember where I was mid-July and like doing my show and stuff like that. And it was not a bullish time because Azuki had just gone from a 17 ETH floor to a 4 ETH floor.
Do you think then, Sam, that maybe we're like, because we're so hyper exposed to the NFT market in our like little niche, like I'm trying to remember back and think whether the more crypto focused people were more bullish at that time, and maybe we just didn't experience that because we were exposed to the NFT market, which was absolutely imploding. Or do you think even if you weren't as exposed to NFTs, they were still not quite as bullish as we may be now?
The crypto complex as a whole wasn't up like this, so I think like it wasn't as strong as it is now, but risk assets were up in general at that time. NASDAQ was hitting I think 1 or 2 year highs at that point, as well. So there probably was some bullish sentiment, but it was, like I said, it wasn't. You didn't have this crazy rally across the system that we're having now. But it's hard for me to know what it's like to be a JPEG disliking, crypto loving person, because I'm not one.
Can't empathize with those people.
Someone just posted in the comments, FT posted in the comments that Justin Sun's exchange, Poloniex, got hacked for $100 million US, according to Watcher Guru. Just came in as a news, went to the Watcher Guru account, looked a bit through the comments. One of the top comments is, "You truly know that the bull market is back when we are back to seeing 9-figure hacks."
Yeah.
I think we got those in the bear too, not to burst his bubble.
Yeah, there's always a.
But
always
they feel different now. They feel more bullish, right? Because
one thing that is amazing is how even during the bear market, everyone's still getting scammed. I'm like, can't these hackers go away? Don't they know we're all poor now? But like, there's still so much money in hacking people's crypto, even in the bear market, that these guys never fucking stop.
Man, Sam, you're absolutely right. Hackers have a higher conviction than 99% of JPEG collectors in the space.
I read that book. In that book, Number Go Up, they say that more money is stolen in crypto than every single bank robbery in the entire world times 100.
Wow.
Thought that was kind of. I mean, I think it's almost certainly true, because who keeps money in banks anymore anyway? But I thought it was kind of funny, given the movies we watch of all the thieves taking money from banks.
That's so crazy.
A friend of mine is investigating cybercrime in Austria with the police force, and he put it very, very bluntly that you just have to be an idiot nowadays to go out on the streets, beat someone up, steal the wallet, rob a bank, when you have all of the beautiful and vast landscape of digital scams, cryptocurrencies, and more to go after.
Yeah,
it's
crazy,
absolutely crazy. Sam, I wanted to ask one more question, because I think it speaks to some of the psychology of what we're going to go on to discuss as well. You mentioned, like, on a personal level, kind of being surprised that you'd forgotten about when we last hit 2K. And I was thinking about this in the context where I was speaking to a friend very recently. We were talking about the housing market. We were talking about traditional stocks, and he's like trying to buy a house in London. And he's like, oh, it's going to keep dipping. It's going to keep dipping. It's going to keep dipping. And my point to him was like, just one of my takes was like, I think it's already dipped, man. Like, if you look at, I gave the example of Meta, and people surely remember, like, that stock went to 90. It went to 90, and it is 3x'd after that. And then he asked, and it's kind of this collective amnesia that I think we're experiencing. He was like, oh, was that during COVID? Was that the COVID dip? And we double checked, and it's like, no, it wasn't the COVID dip. This was after COVID. It did the dip, and now it's back. And so I'm just wondering, like, where's the dip coming from in maybe across a variety of assets? But I think people are just not.
I love how you talk about Meta. I love how you talk about Meta, because I'm like I actually have a lot of views that are sacrilege in this for me. But one of them is I kind of like Facebook. I kind of like Zuck, and but well, I mean, there are two big issues. Like, one is just the market's peaked 20. It was when we went from 0% interest rates to now 5.5% interest, and I think as people were anticipating that, the stock market got destroyed. And that it kind of and right now we're in this world where the stock market keeps bouncing back a little bit when people are like, wait, like rate hikes are over. It's like everything is always about interest rates when it comes to all the markets we're talking about, ranging from housing to stocks to largely crypto. Obviously crypto has these other factors. The other thing that happened with Meta was that Apple went from basically making it very easy for companies like Facebook to know what all iPhone users were doing, so they could very easily target gamers and stuff, to blocking that off entirely. And that really was like very destructive for a lot of the big advertising companies that really leaned on Apple data. And that happened about 2 years ago. But I think like all these assets are basically moving based on what the market thinks will happen to interest rates over the next 18 months. And by the time it's happened, it's too late. So right now, interest rates are at pretty recent highs, and markets are on fire because the market is anticipating that they're going to be lower in 18 months, and that's basically the voting that is happening in the stock market. I mean, interest rates just drive everything in my view.
Yeah,
obviously, when it comes to tech and stuff, there are idiosyncratic stories. Like if Facebook loses all its market share to TikTok and not Instagram because they own it, but to TikTok and other things, obviously, it doesn't matter what interest rates do. That's the alpha of the play. But like the beta, like the broad macro story, I think is very, very interest rate driven still.
Yeah, I love that. two key learnings for the people listening, I think there is that one, the absolute primacy of interest rates in determining so many asset values across the board. And then the second one, I've forgotten now. It's going to come back to me. I'll come back to it in a second. Definitely want to throw to Sammy as well. Welcome, Sam. What are your thoughts on the ETH ETF and the price increase?
Cheers, Peter. Yeah, no, I think just on your point around the housing, so I've been looking for a house in London recently as well, and it's definitely a tough market. But I think it's switched to a buyer's market. I've got friends that are trying to sell. I think if you've got that upper end house, I think that's a little bit more difficult to move at the moment, just because they come off a little bit more than the lower end market. I think there's still demand though. That might change over time. But I think that's kind of representative of the like Sam mentioned, the risk on, the hawkish environment with the interest rates going up, and it makes it a little bit difficult. And I think that's similar with what we're seeing at the moment across the bear market that we've experienced for probably about 2 years now. I think with the ETFs, I mean, I know that there's about 9 futures ETFs that have already been approved, and I kind of see those as placeholders for when these actual spot ETFs come through. And I think the move that we saw recently with was about a $200 increase. I mean, it's not much. It's only about a 10% move, and we see that on a weekly basis from time to time, and it's been quite choppy for the past 6 months. So I think when that actual ETF does get approved, I think we're going to see a lot larger move, and it's going to be pretty swift. I think I saw recently the BlackRock, they've partnered with other banks like Monzo, not necessarily a bank, but Monzo, Lloyds Banking Group. So they get access to ETF funds. So the moment that they turn that on switch green, you could see all these other banks suddenly get access to ETH or Bitcoin via that ETF. So I think the indication that they've filed for that ETH ETF is great, but I think when it actually comes through, we'll probably see a bigger, sharper price movement.
Yeah, I mean, I think that's probably fair. Sometimes people always wonder to what extent it's the anticipation of the thing that actually drives the price initially, and then when it actually comes through, most of it might be priced in. I don't know. As you say, it does feel like with every step or with every announcement, we are getting more bullish. One of the thing I wanted to say prior to this, was the 2 key learnings for me, as Sam really nicely articulated, was that 1, interest rates drive everything. Just completely across the board. I just was not aware the extent to which that was true, given my prior experience and being in crypto all this time. I think that is almost certainly true. And the second thing is that what Sam said was the markets are forward looking. So it's like, yes, the interest rates are high right now, but I think that the reason why things are starting to rip is because people are looking forward and thinking that they will no longer be higher moving forward. Sam, did you want to come in there?
Yeah, I just want to add, I mean, this was something that was like very present last year when inflation went through the roof. Like inflation numbers were going sky high and Bitcoin was tanking. And everyone was like, I thought that Bitcoin was supposed to be the inflation hedge. Yes. Like, why is Bitcoin tanking? And it was like, people, the reason it rallied was because the market anticipated this inflation, because there was free money in the system for 18 months or really for 10 years. But this has already happened. The market already knew this inflation would happen. And right now, Bitcoin is tanking because the market is saying that interest rates are going to go to 5.5% from 0%, and they're getting ahead of that. So it's, this was like a real kind of annoying soundbite last year in 2022 when everyone was getting so mad that Bitcoin wasn't an inflation hedge, whereas that wasn't the right read. The right read was that the market was just looking forward at where inflation was going, as opposed to responding real time, because the markets know that the people have seen the way that interest rates and money supply interact with inflation, and they know what's coming. So I thought that was when it was really like jumped out at me. The only other thing I'd say is I do think that maybe housing markets are a bit more real time rates reliant, because it's how much money can you get in a mortgage today. So it might not be quite as forward looking as like a tech stock or a crypto market.
Yeah, that's fair. Maybe let's stick them on the blockchain and get them moving a bit quicker, and then we'll see. I love this conversation. I think this is really helpful to the people listening in. It's something that I've been, I guess, swirling around in my head, like as you tried to navigate both the market that went up a couple of years ago and now when it went down, trying to make sense of where crypto sits in all of these things, trying to make sense of the movements. I think we've kind of condensed it there into at least a couple of really key learnings. So I hope that's helpful for people. Legendary, what are your reflections on what we've just said? Any further thoughts on that? Then want to get into some of this discussion on what a couple of very prominent traders, collectors have said that their learnings are from the bull market into the bear, now going into what could be this potential uptrend.
Yeah, no, absolutely. Love the discussion on the forward-looking nature of the markets, on the real estate market as well, especially as someone who's currently also looking a bit into the Austrian real estate market, which has and I don't know about the data, but about the UK, but I would be interested to know if you have any indication of that, Bček. But Austria is very specific that we had an extremely high rate of people who took up loans with variable interest versus fixed interest to buy houses, and so many of them are defaulting right now. Really? I think it was almost 40% of people who went for variable interest versus fixed because we just completely lack financial education. People have no idea what they're doing. So this is why our housing market is still crashing, and even got to the highest extent that some of the real estate billionaires in Austria are now running out of money because they've been over leveraged. So there's definitely an interesting collapse to observe in Austria right now. And to continue your point and maybe also build a segue into what you just said, that we will look at some of the learnings of some of the traders in the space when it comes to bull markets and bear markets. To me, as someone who has been in crypto since 2016 and been in NFT since 2019, my learning is that I don't want to diversify as much in terms of having so many bets running on multiple NFT projects, not because I think diversification is bad per se, but just because realistically there's so much happening in a bull market that I just don't have the bandwidth to be tracking all of those. It's also been one of the conversations that we had be talking about how, you're way more in tune with what's going on in the art market, and probably a bit more gaming heavy with things. There's just also the time to find friends to be in this together. And I'm not saying like to share alpha, but like just to keep one another updated on what's going on in the segments that you can't follow. Because trying to diversify across all those different trends in Web3 is not only a diversification of capital, but it's also diversification of time and brain power that you can put into things. So that to me is a big learning that I realistically can't cover it all. And I have to focus on specific bets. And then also find a mechanism to hold yourself accountable for taking profits. And find a structure, like a more systematic approach on how you want to do that independently. If you're DCAing into an ERC20, if you're minting some very coveted, gaming project that's up and coming, you need to have a structured approach on how you want to take profits. If you want to, going to the title of the show, keep the gen wealth that you potentially will be making in the next bull run.
Yeah, I like it. I definitely am on board with the idea that you need to be a bit more bit more concentrated in whatever bets you want to place. I like that idea. I'll tell you honestly, like one of the things I've actually been thinking about now, and I agree with you, you do have to figure out first what you need to do is place yourself and where you are in the grand scheme of things. Like, are you trying to make a lot? Have you already made a lot and are you trying to keep it? So I think that's a balance that people need to strike first. But then I'm actually wondering now, to what extent do we want to take profits? Like if it is true that you think that crypto is the future and there's going to be, just continued value accrual to ETH and Bitcoin over a longer period of time, I'm wondering, like, look, if there is a way to be sustainable from your other businesses or whatever it is that you do, is it necessary to keep taking profits when Solana goes from 40 to 80? Because if you think Solana is going to be the next big thing up there with Bitcoin and Ethereum over a long period of time, like, do you really want to let go of it? I don't know. And so that's one of the things I've been wondering over the last period of time. Like, do I just want to accumulate ETH and Bitcoin over a much longer period of time and just not bother with turning it back into USDC or any other stable coin? But I think the crucial thing to provide for there is that, as I said, it depends where you are in your journey. Like I saw a tweet from Dee's kind of explaining this. It was like, look, you have to know where you are. Are you in that phase where you are trying to make it all? Are you trying to make 5 figures, 6 figures? And then you might need to take more risks, or are you in that stage where you need to just try to manage your risk a little bit more and might have a bit of an opportunity to, because maybe holding crypto is a bit of a luxury, like if you're going to hold it really long term. Legendary, any quick reflections on that? I see Sammy and Kusho's hands raised, want to hear from them, but then I want to get into like Loopify and Deez's reflections, given that they, I think, went from, I don't know what figure, but up to probably 6, 7. And I think Deez touched 8 figures at one point. So definitely want to get into those in a second.
Yeah, I think you need to have a clear goal. You need to have a clear goal with your assets, and you need to know when to take profits, because otherwise you will have exactly that. Like when I got into NFTs, I got in there with a couple $1,000, and I have a 7-figure trading volume on OpenSea that I made throughout the bull market, multiple 6-figure sales, etc., etc. But if you just don't know when to take those profits and secure them, you will lose them at the end of the bull market. Best example for me and best learning was Axie Infinity. Got the token airdropped at 20 cents. Even made that joke of giving my girlfriend a Christmas gift of 500 Axie tokens. And she was like, what am I supposed to do with them? They did run up to $150, $160 each. That was my most expensive 75K Christmas gift that I ever made to my girlfriend. But also, if you see something run up from 20 cents to $150 and you don't have an exit strategy, you're sitting there and you're thinking, why does this thing potentially not go up to $200? Because it already did go from 0 to 150. And then you're thinking, oh, my 6-figure bag could be a 7-figure bag. My 7-figure bag could be an 8-figure bag. And then it all goes to 0. So one thing is to touch those 8-figure, 7-figure heads, but the other thing is to really have them liquid in the bear market, which is when you then can powerfully deploy more capital and like buy what you think is the bottom, and not be the person who buys a single Azuki or whatever, but then actually has 6 figures ready to sweep some floors and has capital ready. And that's something I don't know if this is in Loopify's post that you will touch on, but I remember from my interactions with Loopify, like one of his main points during the bull market, and that was the same for Pranks, is to always have liquid capital available. You might see that underpriced punk, you might see a very underpriced asset, and you just want to be able, if this is the, depending on what price range you're moving on, I'm talking about like Loopify Pranksy specifically, right? You see that punk and you have to have, 80 ETH ready, but you could easily sell it at 120. You just need to have capital ready, even in the bull market, to not be like fully invested all of the time.
Yeah. So the couple of distinctions I make there's, it sounds like you've got to talk about these things in different segments, right? You've got Bitcoin, ETH, Solana, which maybe appear to be like the more major currencies. And then you've got all the more speculative things. And I think those things, it is much better to have an idea of how you're going to get out of those into the higher quality stuff. Kusho, Sammy, your hands raised. I'm just going to, because I think we're staying on the same topic here. So I'm going to go through Loopify's points and then come to both of you to hear your thoughts. So Loopify said, here's some general advice from my side, which hopefully many of you can apply this cycle. As Legendary already said, take more profits consistently. Never FOMO more than you can afford to do so. More so because liquidity is important in bull season. You just said that right there, Legendary. Have conviction in a niche rather than a specific project. Never chase the clones of a successful project that launch straight after. That's a nice learning. They're very rarely as significant as the original. Cut more losses consistently. It will go down 90% after it's gone down 90% already. Spend less on dumb stuff. You will mentally benefit when things go down. Spend time learning how to stay rich before you even get rich. That is one I think almost everyone will completely ignore because it's hard. It's hard to allocate time to something that is not the main priority at that moment in time. So I think that is a very, very tough one. Next, buy real world assets. Go on. Did you want to say something?
Go ahead. I'm going to jump in after that. Sorry.
Buy real world assets. And then you said, have a group of friends. This is the best advice I can give. Literally grind with them in the cycle. Be there 24/7 in the trenches. Know everything. Don't go outside. We'll stop there. Legendary thoughts. Then we'll go to Sammy, then Kusho.
Don't go outside is such a valuable advice. I mean that absolutely seriously. The only
I
thing where I was
completely wrecked
able...
myself in 21. I completely wrecked myself physically. Like, it was not a joke. I don't think it was good, but would I do it again? Yes, I would, because I made it.
Like,
I made
that
a
was
serious
COVID.
sacrifice.
That was
in
the
21.
only reason why I was able to stay up all night and learn everything that I could, was because of COVID, because just all the social obligations did fall away. One of the things, I mean, I agree with most of the things, most of them I already had said, the spend less on dumb shit. A friend of mine, who has a very significant portfolio, made the point that actually it's one of the things, and this is not financial advice, one of the things that kind of quote unquote saved him was spending money on dumb shit, because he was so reluctant to take profits. But the dumb shit that he was buying was, you can't really call it real world assets, but he just started to buy Patek Philippe's, Richard Milles, like the most expensive watches you could imagine. And once his like other bags went to zero, his watch bags didn't go to zero, because they were at least sensible real world assets that he then managed to liquidate for a low 7-figure amount. But that was, it's counterintuitive, and spending less on dumb shit is certainly the right approach. But it reminded me of this little side note that I wanted to make.
That's so funny. Yeah, I guess buying real world assets is a one of the positive aspects as well, though. Sammy, what's your thought on these kind of strategies? What are your reflections? What do you do well? What do you do badly?
Yeah, I think I definitely agree with Legendary's point around having a goal when you go into these frantic times. Just because I think for me personally, making sure you have enough runway. So I was definitely guilty of blowing a lot of money last bull run, but I think the thing that I've learned for this next time round is probably my aim is to have like financial freedom, and that doesn't necessarily mean having 7, 8, 9 figures. I think once you earn over a certain amount, it doesn't necessarily change your life significantly. So I think just having an understanding of what will dramatically change your own personal life and work towards those goals. And I think you do have to take risks to make money. I think concentrating in high conviction plays where you've done your own independent research is invaluable. There's no point chasing trends, because if you're chasing a trend and you're probably behind, you're late to the game. I think that's the biggest thing I learned, was to look independently, look for things that I think are patterns, and then try and dig down in my own research to understand, well, why is this like, why is this, why what's the value proposition here? Like, how will that change at time? Does it have a future? Is this something that I could see winning long term? And I think just the point around like investing in real world assets, like to have your own home that you have no mortgage on, that's a huge thing. Like you then don't have rent, and that gives you so much more freedom, less stress. It sets yourself up so that you can then do stuff that you actually enjoy. So I think just looking into that, and just understanding what your own personal goals are, and then being able to walk away when you do make that kind of money. And I think going back to your point around holding Sol well beyond $80, thinking that it's going to be a high conviction play long term, I think if you're in that position where you don't have those liabilities short term, you can then make a more level-headed decision around whether you hold it, whether you sell it, purely based on your circumstances, or just it becomes like magic internet money after a while. It becomes numbers on a spreadsheet. But if you have those pressures in real life, then it does get emotions involved. And generally, I found that I personally made worse decisions through that. So,
makes sense. I think definitely having a good understanding of what it is that you require can inform the rest of your decision making. Kusho, would love to hear your thoughts on this advice and what you are thinking applies to you at the moment.
GM. So I feel like this is one of the things where we can have a really balanced conversation, because we have people on different levels of the spectrum in our little panel here. So we have Legendary, we have you, we have Sammy, and then we have me, who hasn't really touched much of money in terms of profits for crypto. So I am mostly talking to people at kind of like my level in like the next few things that I'm about to say. The first being that it's really, really, really important to know where you are, because if you make comparisons between yourself and somebody else who has a lot more liquidity to move around, you are most likely going to get wrecked. You know, you will get wrecked. I can't imagine trying to play around with money the same way Legendary plays around with money. It's not possible, and it doesn't make any sense. And I feel like that's something that many people will be tempted to do, because there'll be trends up and down all over the place. There'll be projects moving 100, 10x, you know, and you would want to catch all of them. You'll be trying to say, okay, I'm trying to invest a couple $10 here, a couple $10 here, a couple $10 here. And you really do not have that liquidity, especially if you're just getting in the door in terms of how much you've accumulated in the crypto space. So what I feel like would be the best approach, and which is probably the approach I'll be taking, would be trying to focus on one, projects that interest me first things first. It's not really about leaning into projects that could make the most money, as it is leaning into projects that I know that even if I spend a good amount of my liquidity on this, I would still be excited to be a part of it and to help kind of like push that project, so to speak. So I feel like that's something that is very important, is very key. I also want to say, I think I've forgotten something I wanted to say, but I also wanted to say that, you know, especially when you do not have much money to move around, focus on a few things and take profits on them as quickly as possible. And going back to the same thing that we talked about this some spaces ago, where you were like, know your place in the information totem pole. Know where you are, know where information gets to you, because if you do not have that much liquidity and you're just getting your foot in the door, you're most likely not one of the first few people that will hear about the project. People who are building projects will lean towards telling people who they know have liquidity. If I was starting a project, I would tell Legendary, I wouldn't tell myself. So it's that kind of thing. And know that, and kind of use that to position yourself, know where the whales are, know where the people with liquidity are. And I think the best advantage for somebody who is small right now would be to take a little peek into like the contracts and into the technical layer of things, because that's where you can see a lot of things that haven't showed up on like the Twitter side of things yet. So you can see on charts, you can see on smart contracts if Legendary has bought a particular project, but he won't talk about it on like X. So that's how you get those little advantages. And I feel like it's very important for small guys in the space coming up like me.
That's a very, very, very good point. And it's both what you and Bichek said. You have to know where you are on your journey. And to me, the way how I made the learning the strongest was when I used to work with one of the richest families in Austria in the finance industry. And I got a bit of a glimpse into their 10-figure portfolio and in how they addressed some of the business decisions. And I remember them spending an absurd amount of money renovating a house. And I asked him, is this really a good investment to do that? And he was like, look, I'm not in the business of becoming rich. I'm in the business of staying rich. It's essentially what he said, and kind of explained why this is the right way to spend to him. And you have to know where you are on the journey. Just to your other point, Kushu, because you said, you know, track the wallets of people, what they say on X, what they purchase. Also do that with the caveat, because as you said, people might not be speaking about the things that they purchase. If you look at someone's wallet, we spoke about that with on the topic of Gordon's purchase spree. Just because something is in his wallet doesn't mean that he buys it. People could have sent it to him, and ultimately, from personal experience, I stopped doing most of my trading on my public wallets, because I got to a point where I have a bit more reach on X, and I had people DMing me, yo, I saw that you bought this in that wallet, so I bought it too, and it went to zero. Why? And I never posted about that. And it got to a point where I was like, I'm going to stop trading shit on public wallets and try to obfuscate them and not have them connected to my publicly known wallets as good as I can, except for some minor holdings, or except for some continued trading that I just keep doing for those reasons. So those are some of the caveats that I wanted to address with that.
I like it. We're going to do Deez's list in just a second because I think it's a really cool one as well. Just before that, we're going to get you up to speed with what else has been going on in the Web3 and creator space in the last 24 hours. As always, it's in the snapshot, which is pinned up top. Number one, Michael Saylor's MicroStrategy Bitcoin is now at a $1 billion in unrealized profit. I think we're going to keep getting those stats every now and again as Bitcoin keeps going up, how much is in profit. Next, Courtyard announces Web3 Week of Thanks, free Pokemon card drops. That's pretty cool. They've partnered with Chimpers and another team doing very well with these tokenized Pokemon card drops. Next, Web3 gaming platform Immutable announced partnership with Ubisoft. And finally, Lucanets talks Pudgy Penguins on coffee with America. Moving into the Creator Corner, Proof announced full winter exhibition with Helena Sarin. This is a really nice collection of 75 curated AI-generated images. The mint is at 0.2 ETH. I really like Helena as an artist. I think she's awesome. Next, Manifold introduces Get Physical, digital pop-up shops for physical goods. Manifold's latest feature, Get Physical, allows Web3 creators to easily build pop-up shops for physical goods. Sounds pretty cool. And finally, specialized GPTs for making GIFs, logos, and even chatting with SBF in jail has been shared on X. These are a bunch of GPTs that are like specifically trained to give you particular types of answers, and someone made one to respond to you in the way that SBF might whilst they're in jail. So a lot of stuff to play around with as creators here. Legendary, that is the Creator Corner news and the Web3 Roundup. Should we just get to the final set of advice and learnings from Deez?
Quick question on that before we do that, because we typically would run out of time in 3 minutes. But I also see that this seems to be a very interesting topic, having more than 200 people live in the audience. Should we extend for a couple of minutes today?
Yeah, okay. Let's do an extra 15.
Okay, sounds good. Let's do it.
So Deez has said, so he basically posed this question, and just for the context, I didn't realize we had 200 people, but that's great. The reason why we're talking about this is because yesterday on the show, I was like, I'm feeling a bit anxious. And I'm assuming that if I'm feeling anxious, I'm probably not the only one. When people start to get bullish and stuff starts moving up, it's funny because you start to feel upset when things go down. And then when things start to go up, you start to feel upset that you're not as up as much as other people or as much as you thought you could be. So we're just trying to go through some of the learnings of some of the people who have done it already in the past cycle. And I think, I mean, to some extent, Legendary and I are examples of people who maybe not to this extent, but have done pretty well in the last cycle. But, you know, people like Deez and Loopify have taken the time to write down these suggestions. So that's why we're touching on these things. So Deez said in his tweet, for me, basic things are these. Never leverage. Interesting one. We haven't really spoken about leverage yet. Want to hear people's thoughts on that. Number 2, 10% of liquid holdings sold anytime I screenshot and send to a group chat. So anytime you get too proud of what you've achieved and too happy about the amount of money you've made, and you to the extent that you send it to someone, you have to sell something. Next, tax money parked in treasuries, not UST. That's an interesting point, I guess, so you can earn money on top of it rather than it just sitting idle. Keep 10% of post-tax profit for art that he loves. Interesting. If the NFT bag ever reaches 8 figures again, half is being market dumped without second guessing. I think that's fair enough. I think that's completely fair enough. Never more than 5% of liquid crypto stack in less than 10 million market cap shitcoins. Okay, that's going to take some time to unpack. Never more than 5% in angel investments. And and then a final point he made, which is I only need a 5x this cycle to comfortably leave. I know the game I'm playing. This isn't 2021 where I'm trying to turn nothing into everything. So it's okay to be defensive and hold boring blue chips with 80% of the portfolio. And that speaks to our point of knowing where you are in the cycle. Legendary, some of your reflections, what out of those points stood out to you? What did you think was super interesting? What speaks to you? What doesn't speak to you? What are your thoughts?
There's 2 points that speak strongly to me. First is the first point, never leverage. I know myself too well. That is definitely true to me as well. I'm not using leverage because I would say I'm fairly confident in understanding how most of the, not most, it's an exaggeration, how the leveraged products that I've been looking at work. But just from a personal emotional standpoint as to how I approach trading, I know I wouldn't be the right person to do well when I use leverage trading. So again, you have to be honest to yourself. You have to know what you're good at and what you're not good at. The other thing that stood out, and it's something that we don't really speak that often about in this space, is angel investments. Because I feel, and that's what Kusha also mentioned, right? You have to know where you are on your journey. And that's something I observed in the last bull market when, I was trying to make it from nothing to something, trading and being happy with the profits that I made. And then I was happy about the LooksRare airdrop that I got back then. And I was thinking, shit, why didn't someone ask me if I wanted to invest into LooksRare? I mean, obviously it would have nothing to add of value to them, but I would say this is the exclusive access to deals that certain influencers, KOLs, content creators, VCs, etc., get that the general population doesn't get. That's a thing that we don't really speak about. It might seem unfair. It's the way it is. But that's something that applies to a very small percentage of the people in Web3 on X that having access to angel investments that could be hugely profitable is not something that's likely that you will have in the first bull cycle. Like if you participate, if you do well, if you then stick around for the next bear market, you build yourself out as a content creator, and you then get into the next bull market, and then it is your second cycle, you have a significant reach, then you might also get to play those game of exclusive deals that others just don't have access to. But that's something that you also have to be realistic, that you don't have to achieve everything in one single cycle, because this is not the last. If this is a bull market, it's not going to be the last one. The last bear market that we saw hasn't been the last one. So you just don't have to make everything in one single cycle.
I really like those points. I like the point you make about angel investments. As you say, that was never something on my mind in the previous one. Actually, it probably did. I probably did think, oh, they're lucky. They're lucky for getting in early. It wasn't specifically something that I would be chasing in this cycle, but I think some of those opportunities are coming around, which is nice. The thing that stood out to me more from all of these points are the percentages. And I think the reason why it's important to think in percentages is because it shows that you need to track things and know the weighting of your portfolio. And again, that allows you to make appropriate moves based on where you are and something that is appropriate to you. And the thing, one of the big mistakes I made in the previous cycle, like if I did make a list, it would be that, say, after I made a very, like basically a life-changing sale for me, it was a very high amount. I took, if you think about the advice that Deez has given there, where it's saying keep 10% of post-tax profit for art I love. What I did at one point was take 25% of non-tax profit, and put it into art that I love. So I spent like 20 ETH on some Xcopy editions, which are now not worth anything near what it was back then in dollar value or actually in ETH value. But that was it was a huge mistake. It was a huge, irresponsible mistake that was just caught up in the moment of being very much, it was in this moment of euphoria where everything felt so plentiful. And so for sure, that one really hits home to me now. And now very often when I'm trading, if I make a reasonable profit on something, it will be a certain amount allocation gets sold to USD straight away. And then with the rest, a much smaller proportion could go back into art. But actually where I was in the cycle at the moment, where it's more I just like ETH so much that's just, I'm not investing too heavily in NFTs than, well, I have actually started very recently going back into it. But the point is that that percentage will never be as high as what it was before. And it will certainly not be before I've taken into account the tax stuff. And that is where I've heard so many people get wrecked. And I almost got super wrecked on it because I held a significant proportion in ETH, didn't take it into dollars at the time. And then obviously ETH started going down. This was during the bull market and then into the collapse. So I almost got hyper wrecked. I got wrecked a little bit in the end, managed to get out by the skin of my teeth and still managed to be, do more than fine. But it was a close shave and it's just a huge learning. So I'm very glad that Dee's kind of made that point. I'm glad I've been able to share that for context for people. Legendary, any thoughts on that and any of the other ones?
Definitely the tax thing resonates very well with me. You've been in a similar position. You have to think about taxes. And I also think depending on your lifestyle, and if you really, want to be trading, participating in the bull cycle, I'm not saying if you have a family and kids, but depending on how old you are, in this Web3 space is typically younger. I feel old at 32. Might be even worth it to think about wanting to move somewhere else that's more tax friendly for a bull market, just to max profit from it. It's definitely something that's on my mind. Not very happy about what's going on in terms of taxes where I'm currently based. But no matter if you live in a very tax friendly, crypto friendly regulation or tax unfriendly, just be aware of taxes and set that money aside. And definitely don't, even if it takes 2-3 years to do your taxes, depending again on where you are, don't use that money to trade in the meantime. And for me, the thing was I had some of my tax money, because it's also in Deez's tweet, I had it staked in UST on Terra, because it was like, why not making 20% on return? But then also it was the same person who got an insurance, right? It did have that I had insurance with Nexus, because it was like, I was early to that. I paid, I think, 4 or 5%, 6% per year. It was like doing 40% on my tax money and having an actual insurance on it. It's still good. And ultimately that insurance did save my ass. Like I was fast enough once everything collapsed to get out of Terra and not lose that much of when UST depegged. But I also had that insurance claim. So I was, even if I would have been on a flight, in holiday, whatever, it would have saved me. But the main learning is just don't fucking speculate with tax money. Yeah. Even if you think, you make 5% of a discount by putting it somewhere, don't do it. It's not money to speculate. It's money to pay taxes.
Yeah, very smart takes. I'd love to hear from Sam as well, NFT Stats, for his kind of reflections on these various points we've been making as we may be moving into a time to be more bullish and try to prepare best. Sam, I don't actually know to what extent you consider yourself a trader of these assets. Are you more of a collector? How are you thinking about kind of preparing for a time where maybe we might see some more appreciation in crypto and NFTs at the same time?
Man, I have so many thoughts on so many different things here, and we don't have time. But I did put out a couple tweets in response to the Deez one.
Okay.
The one I'll send you the one I did, and it's more focused on specifically the NFT market.
Sure.
And whereas Deez is kind of more focused a little bit more on how to like build wealth over time.
Yes.
I think I actually had something I think that was quite similar to Deez, where I got, he had a huge windfall because he was early to NFTs and just rode the cycle perfectly. And once he got all that money, what I'm hearing from him is that he started investing in a lot of VC, a lot of like angel investments, a lot of private investments, and none of that stuff has done well over the past 2 years. And I had a similar process where I made a lot of money because I was very early Uber employee. The IPO happened, and I just had a lot more money in my bank than I knew what to do with for a little while. And I invested it in angel investments and different like flyers, different things that I thought could like 100x. And I'm just sitting here now saying, if I just put that money in the S&P 500, I would be so much richer. Like private investments tend not to do that well. I'm not going to lie. And I think that everyone, because I would say like because Dogecoin did so well, everyone thinks the next meme coin is going to do well. Because CryptoPunks did so well, everyone thinks the next PFP is going to do so well. Because someone got in Solana early, you want to invest in the next kind of shitcoin or whatever. Not saying Solana is a shitcoin, but like the next like early coin that like, because you knew someone who invested in Facebook, you're like, I need to invest in VC. And that's just not how it works. It's like, these are like super, super outliers we base ourselves on. And I think that when I hear what Dee said, my sense is that he had kind of a similar experience to me, whereas like he just way over allocated to like the private stuff where you just don't have the oversight. You don't have the talent that you do in a lot of the more established investments you can have, like, you know, maybe like the majors in crypto or like S&P 500 or simple stuff. So that's one thing I heard. I did put out a tweet, and I tweeted so much yesterday that it makes sense that people wouldn't have seen it. But like I did put out a tweet with like my learnings about how to do well in this market.
Okay.
And one thing I will say is what I like, the two of the guys I think are the absolute best at making money in NFTs, bull market, bear market, are Cyrus and EB7. And they're both good friends of mine. And the thing that I keep coming back to with them is how much work they have put in. How much work they have put into becoming experts on what they do, to knowing the market inside out, to knowing who every single player is. And I'm talking like months and months of work. You know, I mean, Cyrus said he didn't trade a single mutant until he had studied the market for over a month. And I think a lot of us are like, how do I make money quickly in this cycle? And I think in this market, the odds are stacked against you unless you're either A, an insider, or B, have done tons of work. Because a lot of this money is a transfer from retail to insiders. Like we just see it, and I personally don't engage in that, but I see it. So in order to do well, you have to put in the work. And I think like guys like Cyrus and Eric just have shown me that, like, and they've done it in very different ways. But I think that that's like one of my biggest takeaways. The other thing I'd say is like, sometimes like one thing that's really been interesting to me recently is talking to Cyrus. And like Cyrus is, you know, I had him on the Proof podcast early. I think he's one of the best traders, market understanders out there. And his whole thing is taking profits. He's always like, take profits, take profits, take profits. And right now, you know, his biggest thing is, I can't believe I didn't hold my meme coin ticket stubs because that would be over $1 million now. And it's almost like, you know, he's saying, I shouldn't have taken profits. And I just think that's kind of interesting how right when you think you have a rule, like suddenly you miss that 100 bagger where you're just like feeling terrible. And this is like the opposite of what I'm saying, but it's just an observation I've had recently about how like hard, fast rules that someone tweets can get lots of retweets, but there's always nuance and you know, intrigue there. And I just rambled a lot, and some of the stuff I said was contradictory, but those are a few things on my mind.
Well, I think that's the reality though, isn't it? Like the point is it can be a bit contradictory, and it's perfectly possible to say that this is a particular type of thing. And that's why we're having this conversation, because people can be as unhappy after they've made profits when it's not enough as when they're actually losing money, maybe actually more unhappy. Like, I don't know how much Cyrus is beating himself up over this, but yeah, would you say it's like, it sounded like a lot. I saw those tweets as well.
He says that he had like over 1 million. And I remember he and I have been talking about it. Like, I think it is getting to him. You know, my dad always says it's harder to have sold early than to lose money. And I think different people have different views, and different personalities have different views. But one thing I know is true, and I think this is a consistently true thing, is that either you lose money or you don't make enough. Those are the only two options our brains let us have. And that is just one thing you got to know, like that you're never going to be happy. And, you know, I shouldn't put it that way, but that happiness is a mentality and kind of being okay with where you are as opposed to a number, because the number is never going to get you there. But and I think we all know that.
100%, yeah. And I also want to connect 2 points. One that you NFT stats Sam, and one that you Sammy made. You NFT stats, we get the difference between the names. You said you mentioned the S&P 500 specifically. You Sammy spoke about financial freedom and also said that's not necessarily tied to a number. And this is where my head has been at. Like, I'm like, after the next bull market, I want to take out as much as I can from crypto, put that in an MSCI world. The stock market does, and this is where I'm ultimately coming from, does an average of 7% per year, has been doing that for decades and decades, globally speaking, not the S&P 500. And if you have that portfolio, you take out 4% per year. The rest, the 3%, is the long-term inflation, because you want to have the same purchasing power, inflation adjusted. Take out 4% per year, pay capital gains on tax. that, if you do the math, say you have, take a bigger number, say you have 5 million in there, 4% is 200K, pay capital gains, mostly 25% in many jurisdictions, you make 150K in passive income. And I would rather have that, and I know 5 million is a high figure for 99% of people, but just comparing, I would rather have those 5 million in an MSCI World that does that very boring thing of 7% in a year, allows me to take those 4% every year without attacking the capital stock, than having a chance of doubling, tripling, quadrupling that up with another NFT flip. Because as you said, financial freedom is not necessarily tied to a number. Again, it doesn't mean that 5 million number is a very attainable number for most people. It's just one example figure that I'm using in this. But that long-term thinking of what you could do outside of crypto with that money, instead of chasing the ultimate high or the ultimate top, is one of my biggest learnings as well.
Yeah, I think that's a super interesting discussion. We're probably coming towards the close today now for this talk. I think one of the key, I mean, there's been all kinds of interesting stuff. I think on a departing note, as much as we set this up as a way to try to prepare for some of the potential unhappiness of not making as much as you can, maybe one of the realities is that if you lose money, you are going to be unhappy. And in this type of environment, and I remember very, very clearly that euphoria of 21, it was actually quite stressful, even when making money. And there's always people who are either making more. So even in that environment, when you're doing well, it's just, there's always something that you're going to let go of too soon, in the fear of round tripping, going up and coming back down to the point that you made. So as you say, just, you have to try to navigate it as best possible. If Cyrus's advice was take profits, I suspect that probably is reasonable advice. I suspect he still made money on the meme tickets. It's just not quite as much as he would like, but that's still more than nothing. So very, very interesting discussion. I hope that has been very helpful for all of the listeners today, reflecting on how to navigate this potentially more bullish environment going forward. So thank you so much for joining us today, everyone in the audience. Thank you to Legendary for co-hosting with me. Thank you to NFT Stats Sam, as always, providing awesome insights. Thank you, Sammy, also providing some really interesting thoughts, and Kusho as well, providing some really awesome perspective as well. Guys, that's the end of the show. That's the end of the week. We're at all-time high numbers. We're really thrilled about that. We hope to see you all again as we do this all again from next week. Have